And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends and traders. Welcome to the market forecast. It is Thursday, July 7th, 2022. I am your host for 2 more days. They call me JD around here. As always, thank you for choosing to spend your time with us this morning. Hopefully we can all walk away from this with a little more knowledge and understanding than we had before we started. Remember to hit that lucky like button. Feel free to share your comments and feedback in the chat. We do appreciate all forms of feedback. And go ahead and subscribe to the channel if you haven't done so already, so you get those lovely updates every time we go live. One last reminder for the week, Hogue is on vacation, so there will be no Make Hogue Money session later this morning. But our good friend and mentor, Mr. Hogan, will be back next week, and we'll get right back into those sessions as well as group coaching sessions. So let's get started this morning with the economic calendar. We had a couple releases out already this morning. Challenger job cuts report, international trade in goods and services, and jobless claims. First, the Challenger job cut report. This comes from Seeking Alpha. Job cuts in June jumped 57% from May and 59% year over year. This month's total marks the highest level since February 2021. When 34,500 cuts were announced. On a quarterly basis, Q2 job cuts of 77,500 were the highest since the first quarter of 2021, when 144,000 job cuts were reported. Next, the International Trade in Goods and Services report, also from Seeking Alpha. Trade in goods and services narrows less than expected in May. The May International Trade in Goods Services came in at minus $85.5 billion versus $84.9 billion expected, and a revised number, minus $86.7 billion in April, revised from $87.1 billion. Next, we have jobless claims, which came out at 7:30 just a few minutes ago. This coming from Bloomberg. Applications for U.S. employment insurance last week rose slightly, suggesting that labor market conditions are moderating. Initial unemployment claims increased by 4,000 jobs to 235,000 in the week ended July 2nd. That's what Labor Department data showed. The median estimate in a Bloomberg survey of economists called for 230,000 applications. Also coming out later this morning, we have the EIA natural gas report at 9:30 Central Time, the EIA petroleum status report at 10 o'clock Central Time, and later this afternoon, a couple Fed speakers, James Bullard and Christopher Waller, are speaking at 12 o'clock Central Time. In between now and then, we have a slew of T-bond note and bill auctions and announcements, so keep an eye on those also. Overnight markets. Overnight stocks in Asia closed mostly higher. The Shanghai Composite up 0.27%, the Hang Seng Index up 0.26%, and the Nikkei led the way up 1.47%. Currently, stocks in Europe are also ripping higher this morning, with the DAX up 1.65%, the CAC up 1.51%, and the FTSE up 1.22%. Also, rounding it out, stocks in the U.S. are poised to open nicely higher this morning. Looking like a good day so far. The VIX down 3.7% to 26.52 this morning, and the 10-year Treasury yield has dropped to 2.926%. All right, let's take a look and see who is in the room this morning. Oh, look at that, opening up, Jenny Doherty. Good morning, Mom. My mom's here, everybody. Like your show this week? Thanks, Mom. Let's get her in a trading combine. Tachyon, Shaw, Brian, Patrick, James, chilling with Dylan, Terry King, Bill Phillips, Jerry is awake, Brody, Charles March, Frederico, Mr. Hoagland, good morning. What are you doing here? You're supposed to be on vacation. Sarah Hall, good morning. Federico, Glitter Sandwich, Juan Palomino. Yes, you can trade MCL in the trading combine. Micro crude oil. You got it, Juan Palomino. All right, everybody. With that, let's dive into a couple charts. Let me just cue them up here real quick. And here we go. Let's start with a daily of the S&P 500. This is a daily chart of the September contract in the S&P 500. So yesterday was a pretty mild day for the S&P. All day, including overnight. The overnight Globex session, the ES traded in just about a 65 handle range and closed about 14 points higher in a fairly, I guess you'd call it a choppy trading session. Volume, pretty steady, not overly impressive. Total of 1.6 million contracts traded in the September contract, and we also picked up an additional 3,200 in open interest. The ES spent bulk of the day trading in between this 10 and 20 day moving average right here, and actually closed just inside the 20-day. Like we've been talking about all week, there was some opportunity to trade both sides of this market yesterday, and it looks like we might have the same kind of opportunity again today. 4 hour. For the last 2 days, you can see here prices have just been kind of tiptoeing along these shorter term moving averages. Volume and volatility have both, I wouldn't say dried up, but they've dropped quite a little bit since this dip and rip here on Tuesday. These moving averages are starting to diverge just a little bit, signaling mildly bullish price action, but to me, this market is really still kind of looking for direction. Here's our 30-minute. We can see here it was a pretty quiet day while the markets were waiting for the release of the FOMC meeting minutes yesterday. Then right at about 1:30, we got this pop here that took out Tuesday's Globex high before settling back down to close inside value. Overnight inventory looks to be kind of mixed, maybe a little long, like it has been all week. You can see a lot of choppy trading and overnight sessions happening this week. No gaps, really. It looks to me just like a lot of jockeying for position during these overnight sessions. This still kind of signals some indifference to me, but I think, like I said, we will get to see a little more two-way price action heading into the end of this week. Overall, this is a continuation chart of the ES. Overall, this market still feels kind of flat. The slow stochastic oscillator down here is showing slightly positive momentum, but the size of these trading ranges just doesn't impress me too much. It's times like these when a market gets really slow, I kind of get that feeling that if I stop paying attention for just a second, someone's going to come in and rip the rug right out from underneath my feet, you know? You ever get that feeling? So stay on your toes with this market. You can play these tight ranges, but I will not be loading up on any size until I see some real direction. Let's check out crude oil. So after a move to test this low from early April at 95.47, we did see some buyers step in yesterday, which kind of followed through in the overnight Globex session right here. In all, the August contract lost 7,600 in open interest during yesterday's move. Kind of sounds like short covering to me, or maybe a puke, but it doesn't look like this move lower is really over yet. Price has broken out of this. Well, we're on a continuation. Here's our daily. I drew this bear flag the other day for you. Price has broken out of this bear flag. The 10 and 20-day moving averages have closed below the 50-day, or have crossed below the 50-day. Volume is pretty strong. This slow stochastic oscillator is showing negative momentum. We've closed below our weekly kickoff low 2 days in a row. All signs are still pointing to weakness right now in this market for me. Here's a 4-hour chart. So this 9 a.m. bar right here from yesterday, this looks like to be where the shorts started covering positions. We still saw a little more buying coming in overnight. Still pretty steady. Prices are currently resting just below this 10-period moving average right here. This 20-period moving average lining up with weekly kickoff low could be our line in the sand for today, or at least a good target area to test if buyers keep stepping in. On the 30-minute, these profiles are painting kind of the same picture for me here. After rejection at these lower prices, it spent a good amount of time trading inside Tuesday's value area here, but never really traded above Tuesday's point of control until just recently. We just kind of crept above it in the last hour or so. Closed out near the highs of the session, which also brings a bit of positive momentum going into today's session. Overnight inventory looks to be just a bit long. So we might get a test of that 102 area this morning. It's not out of the realm of possibility. Overall, I still think, just based on the last 2 days of movement, I still think this market is weak right now. But we are looking at a possible pullback this morning. A close back above our weekly kickoff low could start to change my mind about momentum, but I think crude has some more room to run to the downside right now. All right, on to the Nasdaq. So here's our daily chart of the September contract. So the Nasdaq, it looks like it's found a little more direction than the ES has, at least in the short term. These ranges are a little bit bigger, not significantly bigger. I mean, yesterday was still kind of tight. The short-term moving averages have converged on each other, with the 10-day looking poised to cross over the 20-day, maybe sometime today. And we're getting closer to this 50-day moving average also. It's right here in the red. Here's something interesting, though. During yesterday's mild rally, the Nasdaq lost 8,000 contracts in open interest in the September contract. Let's see what the 4-hour is telling us. So I think it could be a combination of weak shorts who got caught in this dip and rip, sort of a bear trap on Tuesday. They could be getting out. It could also be some short-term bulls just covering the longs. Or there's just a lack of interest in this market right now, and no one wants to get caught on the wrong side of whatever move is about to happen. They say you should never short a quiet market, right? And, well, here's your proof. Just these last 2 days, kind of a slow grind higher after this rip late Tuesday. It's just been a slow grind. Here's our 30-minute. Again, same scenario as the slow, choppy trading session, waiting for the FOMC minutes release yesterday. We got that pop at 1:30 Central Time right here, then a move back down inside value. Overnight inventory, just a little bit long. Did not take out yesterday's high overnight yet, so there's no gap to fill at this point. We're just looking at more of a grind higher. Overall, I feel mixed about this market too. I want to trade both sides of it, but I don't want to put on any size until I have a better idea of what direction this market really wants to go. We're still kind of moving sideways right here, which was our call for the weekly kickoff, some sideways trade, and it looks like we're going to get more of the same today based on these early indicators. And last but not least, let's see what the gold market is up to. So yesterday was another dump day, another dump session for the gold. August contract lost 10,000 in open interest during yesterday's puke. So it would appear that traders are getting out of the way for now. You can see the volume is so strong. Momentum's to the downside, and prices keep crashing through old lows, going back to November of last year. On the 4-hour, we're seeing a bit of reprieve this morning. Here's this bar here from late last night was the first bar to close above the previous bar's high in 2 days. So that's a minor positive. Not much of a positive, but a positive nonetheless. Other than that, I think this market has a lot of work to do if it wants to pull any new longs into it. This just looks extremely bearish to me. Yesterday's price action looks almost identical to Tuesday's, doesn't it? Sharp move lower right when regular trading hours opened, followed by some consolidation once the low was in, roughly 2 hours into the session. Then this drifts sideways through the overnight Globex session. This morning prices are edging slightly higher than they did yesterday, just looking at a visual comparison of the two. But still clearly trading over yesterday's point of control. That said, if there is a pullback today, I would expect it to be a minor one. Overall, I think that bears are clearly in control of this market right now. I would need to see something pretty impressive to convince me to put a long on. Right now, I have very little confidence in the long side of this market. So, in my opinion, best to stay patient and wait for a good entry point to get on the right side of this one. And if you are going to trade from the long side, maybe downsize your lot size and keep those stops real tight, because there's no telling when this thing could fall out of bed again. So that's all we got. Let's check back in on the chat. How is everyone doing? Everyone saying hi to Hogue. Good morning. Good morning, Hogue. Busy, busy, busy. Good morning, good morning. VIX going down. Is gold downtrend due to the strength in the dollar? It has something to do with that also. We've been talking about that on the forecast and recap pretty much all week long. Dollar hit 22-year highs just the other day against the euro. So that is a good reason to scale out of gold, in my opinion. What else do we have? Any more questions coming in? That looks like it for now. So one more announcement. All right, it's Thursday, so just a reminder that we will not be doing a market recap this afternoon. However, you can tune in at 3 o'clock Central Time for the live recording of the Limit Up podcast with our friends Jack and Dan Hodgman. Again, that's 3 o'clock this afternoon. Other than that, I guess we can call it a day. Hogue's here, so we'll take our deep breath for Hogue. All right, be patient. Have a great trading day, everyone. And I will see you back here tomorrow morning bright and early for another market forecast.